This is Alan Bush with ADMIS. In the stock index futures, yesterday we did see some new historical highs in the S&P with the cash index advancing beyond the 2,000 level. Also, we do have futures firm today. The ongoing dominating influence remains the very low interest rate structure, but also we are seeing some support from merger and acquisition activity helping stock index futures. Some of the reports that we had today were, I'd have to say, better than expected on balance, with consumer confidence coming in quite a bit stronger than anticipated. So as far as our short and long-term views, still looking for higher prices in stock index futures. Over in the currencies, the dollar index recently making an 11-month high. Today we have backed off a little bit in the greenback. Also, we are seeing a bit of a bounce in the euro currency, even though it is starting to look more and more likely that the European Central Bank will need to add more accommodation in one form or another, possibly with a quantitative easing program. So the anticipation of easier credit from the European Central Bank is very much undermining the euro currency, and I think this is a situation that is likely to persist for quite some time. And in the Japanese yen, a little bit of a gain today, some flight to quality buying, but overall I think the interest rate differentials will dominate. Still looks like the Bank of Japan is on track to ease monetary policy again sometime within the next year or so, and that would tend to put pressure on the Japanese yen. So from here I would expect lower prices in the yen. Credit markets holding up very well, especially in the long end. We do have Treasury auctions today, tomorrow, and Thursday. We would continue to focus on the long side of the 30-year bonds while avoiding the other Treasury contracts, especially up front at the short end of the curve, where that market is being dominated by prospects of tighter credit from the Fed, with the consensus view being that the Fed will raise rates in the middle of next year, even though our feeling is that the Fed will not be in a position to raise until 2016. So in any event, though, focus on the 30-year bonds. That has been the leader to the upside. It will probably continue to lead to the upside, and that is the one to be trading from the long side. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.